All right, let's do this again. So I was recording this video, my computer crashed, or I think my power reset in my room, and everything's gone. So I have to record it all over again, start fresh, and hopefully everything's working, everything's being recorded, and I am good to go. Let's pray that it is in that case. All right. So this is going to be a new series where I'm going to record myself talking about how my week went, my weekly review, and then also quickly scanning for the opportunities for the coming week ahead, the earnings calendar, the economic calendar, basically what I used to do on the Sunday stream, but instead just adding on top of that my weekly review as to what I did good, what I did bad, and how can I improve on those little nuances, the goods and the bads, and so on. Get a better trader, become a better trader, become 1% better than we previously were, and so on. So, new video series. Hopefully, this can document my growth or deterioration as a trader, and we'll see how it carries on. So, once again, the point of it is just to go over the trades that I already traded, the best opportunities from last week, understanding the little nuances and the things that make those trades, noteworthy, and then try to see if we can find those opportunities in the week ahead. That's all. That's the goal of it. I've been watching traders who are $1 million a year traders, $100,000 a year traders, basically traders who are making tons of money a year doing these practices, whereas I have not been doing any of these practices. I've been doing trading for about 3 years, almost as a joke when you compare my practices compared to some of the top dogs of the game. So if I want to beat them, I gotta emulate them. So this is part of the homework, part of the step towards being more serious into the trading career, taking trading more into a business aspect of it. And boy, oh boy, is it a lot of work. You guys will see what I'm talking about. So let's dive into the full screen. Start with the weekly review. Start with the weekly review over here. Starting off with right off on the screen, you'll see a tweet that I have screenshotted. This tweet is actually, speaks volume. It says it's the trades that you say no to that define your career, not the ones that you say yes to. A problem that I have is fighting my own inner thoughts. I think I want to be in a trade, but I know that it's not a good enough of a setup. It's way low EV of a setup, but still I go, you know what? Let's just take, minimum share entry where it doesn't hurt that much. Let's just do it. Let's just do this. Let's just do that. So it's those let's just do situations that I get into that end up obviously hurting my PNL in the long run. So I want to be more selective as my trade opportunities and other setups that I hit and so on. So this point right here is actually speaks volume to it. It's traits that you say no to that define your career, not the one you say yes to. Continuing down my weekly review, what did I do good? Stock selection was pretty good. Picking the right stocks to be involved in, the right catalyst, the right basket of names. For example, quantum, drone, whatever sector was moving, whatever sector was in play. Stock selection was really good. Managing exits, so managing exits on winners was way better than what I have been previously doing. Before it would just be, oh, I like the amount of money I'm up now. Let me just take some profits here, and then I would be upset and then crying about how much more in the money would I have been had I traded the stock properly and had I stuck to exit rules and so on. So now getting better at sticking with winners, holding winners to at least get 50% or a little bit more than 50% of the move. Obviously, you want to make more than that 50% if you can using proper exit rules. But changing the way that I've been doing it before, holding on to winners longer, getting rid of losers quicker. That's the name of the game of a profitable trading career. Trading my idea that was planned the night before on stream. For those if you don't know, I stream Monday to Thursday 8 p.m. where I go over my my watch list. I go over possible zones, levels of interest on specific stocks that might be on interest the next day. So planning for stocks such as OKLO, LUNR the night before, and then trading them the next day actually was some of my best PNL on the last week. So need to be maybe more focused on the setups that I plan for, especially if those setups are playing out the way I planned for them, right? Not if they're not playing out the way I planned for them. Don't force them in that aspect. But when the stock is playing out the way I planned for them, be able to capitalize on those moves a little bit more. Write up overload. This has been something that's been happening for about December, mid-December, going into now. Obviously, the last 3 years of my trading career, I've never really written up stocks, but now that I'm seeing some of the best practices being put into work by traders making more money and improving at a faster rate than I am, I have to play catch up. So the way I'm playing catch up is, writing up about, it's not like a limit or minimum. It's just opportunities that I find in a day that I think I would be involved in. So it ends up being about 10 stocks a day that I'm writing up. But the more and more as I'm writing up stocks, I'm starting to recognize, some stocks are good, some stocks are not good or worthy enough to be written up, and that is in itself adding another layer of skill for stock selection in me, for setup selection in me. And I feel like the longer I do this, the more honed in on the stock selection, on the discipline trigger, and so on will be being built by doing all of these steps that I'm currently going through. What did I do bad? Over traded a bit. So this is, a problem that I've had forever. It's like I'm playing Pokemon. I'm playing gotta catch them all, but realistically, you're not playing Pokemon. Someone that's, multiple people have said this to me. Trading is you'll start making money in trading when you start making it boring for yourself, right? So stop over trading. Don't need to be on the keys, overly active. Just take it slow. Be very selective with your setups. The more selective with your setups, yeah, you're gonna miss some of the big moves, and you might trigger FOMO that way. But if you're able to subside the FOMO from not taking some of the setups, when the good setups come into play, you can really smash those setups and have a good buffer zone starting to being built for your month and so on. Sizing structures all whack. Need to be way more trustworthy on the sizing for the setups, especially with higher EV plays. So this obviously comes with, I believe, with the amount of stocks that I'm writing up. The more stocks that I write up, the more I'll be able to recognize what is a high EV setup and what is a low EV setup. And then once I'm able to differentiate that, I'll be able to take more size on the higher EV setups than the size that I currently do, which is very evenly divided, right? My size is very evenly divided per trade at the moment, but you want to be able to do exponential bet sizing. The even bet sizing is never gonna work out because it's just when a low EV setup and a high EV setup, both of them work out. Sometimes you just end up being net even if you're lucky, or somewhat red. But what you want to be doing is exponential betting. You want to be able to put more size on a higher risk, almost like poker. When you have pocket aces and it's pre-flop, you want to be able to push as much money as you can before the flop even comes out. Get as many people to step away from the pot and see how many other hands think that they have a decent enough of a hand to fight a pocket aces. Now that might be wrong way to play poker. I've played poker like that, and I've been told to really bet more when you have better hands right off the hand, when you get your hands before the first three cards open up on the table. So higher EV, you want to bet more. Lower EV, you want to bet less, maybe not even take them. That's the idea behind sizing. And the more stocks I write up, and the more I'm able to differentiate the nuances between an A plus, a B, and a C plus trade, and so on, or a C minus trade, whatever, right? An A, B, and a C graded trade, then I'll be able to really work on the sizing structure. Right now, one step at a time, tackle one battle at a time. I was tackling a little bit of the over trading issue, but I think that's not really as much of an issue for me because I'm not really over trading in the sense of taking too many trades at one specific time period. I try to limit myself to like 3 stocks, 4 stocks at best for a specific time period, but over trading in the sense of setup selection and just taking low EV over traded trades. So that's what my problem is. I think I'm tackling that really well. I'm probably should be much better that going into the week ahead on that aspect, and I want to be able to tackle sizing aspect a little bit more going into the next week. Took breakouts when the stock was already overextended. Not listening to my inner thought process where I go, the stock is already overextended, don't take the breakout. But I still end up taking the breakout with small size or a little bit size, and then I end up giving back the money that I already made, or starting the day red, for example, on Fubo, or for example on IonQ. Those charts are actually down below over here. I'll talk about that in depth a little bit more. God, my throat. All right. Traded VRME like an absolute baby, too emotional and making decisions out of no variables instead of letting the chart tell me what to do. More about this is explained over here down below in how to trade better. So we'll talk about that in a second. Um, where was I? I do not sleep well or wake up early on time, but this is also because it takes me really long to do my daily tasks. That's something that I will have to deal with a little bit longer, I feel, because of how long it takes me for public transit to get to work, to get home, and everything. Um, how can I do better? Trade less emotional. If you see emotional triggers getting activated, drink water, take deep breaths. If needed, get up from the chair, take a quick stretch. I've been noticing a trigger that can really help with this, which is how fast my leg moves. The more faster the leg moves, more fast. The faster your leg moves during uncomfortable times, then if you notice it, which I'm starting to notice it a little bit more. Stop the leg, take a break, step away from the keyboard, stretches, deep breaths, and go through the entry exit criteria checklist. So if you are in a trade such as VRME, you're not really used to small caps, but you have a beautiful short on board, don't let emotions take control of the trade. Step back, look at the checklist, go through the entry checklist, exit checklist, go through the higher time frames through lower time frame analysis, then make the decision. Don't just make decisions just because, oh yeah, I think I need to be taking profits here. Oh, I don't want to take a loss on this, so I'm just gonna get out. No emotions. Trade the trade, trade the chart, trade the setup. Uh, for sure need to size according to the setup. Obviously talked about this a little bit in depth earlier, but yes, need to be sizing according to the setup, not according to emotions or not according to PNL on the day. That's also a problem for me. Your PNL on the day doesn't matter. It's fun coupons, right? It's fun coupons. Either you're down on the fun coupons on the day or you're up on the fun coupons on the day. You don't take size into the next trade based on your last trade. You take size on the next trade based on the next trade's setup, grade, and the EV behind it, right? So focus on that more. No emotional, only setup. Grading setups and applying more time into taking trades might actually be better. So this is something that is a very valid point. What I have been previously guilty for and still guilty for is taking a trade, building size into it, and then grading the setup as to, oh, is this a is this a B, is this a C? If I sized into it more than a B trade into, let's say, an A trade, but it's actually a C trade, then I'm starting to take some size off the board, get scared, doing some stupid stuff. So instead of getting into size and then grading the trade, learn to grade the trade and then get into the size. So that's probably going to make you miss more trades, obviously, but when you are able to grade the setup, take some time, patience, go through the entry exit checklist, not being hasty and FOMO and trigger happy to get into position or size, go through the checklist, actually focus on the quality of the setup and then grade it and then build into the size. If you still miss it after that, whatever, there might be another setup, the next one that comes around the corner, hit that one, but don't FOMO into the one that you just graded and you just watched it go away from you. No point in that. Take the next trade that might set up for you. Learn to take profits on winners and then get back in pops. This is actually something that could be shown as a quick example for as LUNR. Taking that entry, going all the way down here, what looks like an almost failed break a low a day, and then pops right back into VWAP. Learn to take profits down over here for scalps and then build back. I did build back into the trade, but if I had had that trade paid for me, I could have really added to that size over there. But because I didn't have that scalp kind of paid for me, I didn't take that scalp because I didn't have enough size on the table. That is a problem that traders go through a lot. When you don't have enough size on the table, you don't take profits where you should have been taking. Had you had too much size on the table, you would have been taking too much profits where you should have been taking profits, but not holding enough size for the move later on. So a couple battles that traders have to go through in the sizing aspect. Once you find the middle ground, that's when you really unlock the potential of the setup, of the chart, of yourself. So if had I taken that profits on the scalp down there, I would have been able to add more size on the pop because, hey, I already got a little bit of money paid for. If the stock does pop back from after this ad, I still lose on the trade, but not as much because some of that money was actually made as profits, right? So a couple ideas over there. Learn to take profits when the stock is working for you and then get back in on pops or drops depending on the direction you're in, but also learn to identify things that are going against your favor. So learn to see things that are not in your favor, that way you scale back from it. Learn to see things that are in your favor, that way you learn to scale up for it. For example, OKLO, I had an idea that if OKLO, which 28 was the all-time high, if the stock opens above 28 or stays strong around 28, there could be a long on this position. So as you can see, the opening drive, stock runs up. I'm a little hasty to get into the long. After I get into the long, I'm then analyzing the setup. I go, okay, you know what? The stock is above 27. And we're finding buyers above 28. I'll just wait and take the breakout to add size. I take the breakout, that breakout immediately gets stuffed back down. That is against me. That right there, that red candle after I add more size is against me. So learning to recognize what goes against me, I should have been able to cut that trade maybe a little bit earlier. But what I do is I wait for the pop, which is good. I wait for the pop and then I'm studying the pop. I'm looking at the tape to see how the tape reacts. The tape shows me some weakness, so I get out of some size. It goes back into the low. Now it's in my favor again because it's not really breaking the lows. It's not making a new lower low. It's making a higher low and then it pops right back up. Good. The old me would not have even taken that exit. The old me would have just added size after what I saw was against me, right? Not recognizing what's against me, but seeing what's against me, recognizing that, and then de-risking on the trade because the second time it pops back up, again, tests the same high area, gets slammed back down, so taking some size off the table. But then recognizing another higher low, higher low, higher low, higher low. We're testing this high day area again. This is the new all-time high area. News came out on the stock basically a day or two ago. So all things combined, now these things are in my favor. So first against my favor, then in my favor. This is where you add size, add to your trade as the EV now really starts to get into your favor and things start to get better for your trade. So learn to see what's going in your favor and then learn to see what's going against your favor. The against my favor thing is actually something that I'm not so good at, such as this little read I had on OKLO. I'm glad I was able to make that read that day, but I'll be honest with you, I'm able to make that read a little bit more right now as I'm talking about it. I don't think I was actually thinking about that as much as I'm talking about it right now. Probably the tape is what made me get rid of the two sides and then add back the two sides. That's the skill level that you'll build by trading more, having more screen time, recording your screen and watching back the tape and so on. So that would have possibly helped me on that trade. But learning to see on the chart what is in your favor and what is against your favor is also very important. This is in the same concept as this is the same idea as not taking breakouts. So taking overextended breakouts if the stock is overextended or 2 standard deviation or more from the 21 EMA or from the VWAP, maybe don't take the breakout. I need to test this idea more, but I like that idea. Also, one ATR move idea if the stock is making, for example, one of my worst trades of the week, Ion Q goes from 55 to $50 in one straight swoop to the downside. This is a 1 minute chart and it goes from 55 to $50 in about 5-10 minutes. So one straight swoop to the downside after a pretty volatile open, and then I'm taking a breakdown of $50 without any real pattern. Taking a breakdown over here looks much better. You get a pop, a flush, another pop, a lower high, and then another flush, a breakdown of this low. That looks much better, but still pretty low EV if you ask me, or maybe decent enough EV, but it just never worked out. The idea is, take the breakout here if you want it, not over here. It's just not a trade over here for you to be involved in. I sometimes recognize myself doing these and then say, no, 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 don't do it, but I still do it anyway. So maybe an actual measure to keep me away from those trades, a quantifiable measure to keep me away from those trades, is seeing how far the stock is away from its 21 EMA and its VWAP. If it's 2 standard deviations or more from both of them, or it has made about 75% of an ATR or more move from where it started to where to the breakout level, maybe don't take that trade at that point. Don't take that trade. So couple points on how I could have done better this week. My best trades, MSTR. This was a nice breakdown on MSTR on the 8th of January when Bitcoin, the market, and everything else was cracking down right at the exact same time. MSTR broke its low a day, and I was able to capitalize on a big move to the downside, one full ATR move. The one thing that I'm pretty upset about is I was so happy and emotionally excited about capturing a good winner on the MSTR short side that I completely ignored and didn't even think about the reversion, the mean reversion, the capitulation long. The volume comes in and the capitulation long sets up. Not only does it set up, it gives you an even better, higher EV trade to the long side, and this is actually a trade that you've seen Lance talk about sometimes too. You take the low a day breakout, stock accelerates, volume keeps increasing as it's going lower and lower, the bars keep getting narrow and narrow and narrow, and then eventually you get a big volume capitulation. You take the 2-minute bar breakout long back through, and not only does the stock reverses 100% of the move, sometimes it reverts more than that. You can see how it goes to VWAP and goes a little bit above VWAP. On the short side, you got about $10 per share, maybe a little bit more than $10 per share. On the long side, you got way more than $15-20 per share. So just to understand the strength behind the other side of the coin. Also, don't be too excited. Don't let emotion dictate your trades. Gotta be more of a sniper, calm, patient, collected trader. OKLO, one of my best trades, along with LUNR. These were the trades that I planned for on the night before on stream. As long as the stock opens above its all-time high, I'm looking for the long. As long as the stock opens below 1950 to 1960, which is somewhat of a daily level. If you look at the stock on a daily chart, it opens below it and then it offers you some short opportunity. Sadly, I was not actually looking at the stock at the open because this was the day when quantum stocks bubble were getting popped and they were all opening down 50% or more. And at that moment, I was too focused on looking at quantum names instead of LUNR. Had I just watched LUNR to see if my idea plays out, I would have been able to get a short much earlier and then be able to basically ride that stock for a bigger move than what I wrote it for. But I'm not too upset. I think I traded the stock well. I was in and out of it all day, taking a tiny loss, but then in and out of it all day, scalping my wins and then getting out if the stock is going against my favorite, then scalping my wins again, getting back in short at VWAPs and so on. So just smooth in and out all day on that stock. So my strengths right there, recognizing the MSTR breakdown, and then my other strengths are creating a game plan and then waiting for the stock to actually show me that game plan playing out. For example, OKLO, it was very hard to you for you to be long and stay long on OKLO, because the starting half an hour of the day, you can see, or starting hour 9:30 to 10:30, the stock didn't really do too much for the longs. It would go up and then get slammed back down, go up and then get slammed back down. So if you were long in this area, after each slam back down, you were potentially scared of your longs, as I was, right? You were potentially scared of your longs, as I was. But because I really stuck to my idea, I said either it breaks 27 to the downside and I take the loss, or it continues to play this game between 27.50 and 28, and then eventually breaks 28 for another big run to the north side. Actually, sorry, eventually breaks 29 for another big run to the north side. I ended up being right on that idea. So sticking to my concepts is good, but I should also be able to not force the concept too much. I should be able to understand the charts, read the chart, read the tape, and then be able to recognize what's in my favor for my thesis, what's against my favor for my thesis, and if it's in my favor, really push it. My worst trades, the breakout trades. So taking a pre-market high breakout with one straight swoop to the upside, stupid. Same thing again for IonQ, taking the low a day breakout after one straight move to the downside from the highs. And then my other worst trade, I wouldn't say this was actually my worst trade, but what the problem over here is the same thing as I mentioned in what I did not do well, or how I could have done better, which is recognizing things that are against me. For example, IonQ had a flag off the open, right? You can call this a bull flag. The bull flag broke out somewhere in this area and then ran to the high of $51.60. That got slammed back down. That's fine. You got slammed back down, but you still managed to hold a little bit higher than VWAP. After holding a little bit higher than VWAP, they ran the stock back up, but now it looks like a little bit like a head and shoulders almost, right? A lower high coming into play, and then another big slam back down. Another opportunity for you to get long if you're really interested, and I was, so I went long, but that gives you a lower high. A lower high again, another big slam back to the downside, and a consolidation. Look what I do. I add to my position. Not able to recognize the thing that's against me. A higher low, and another higher low. With each time, we got a buying pump and a big swoop down. A buying pump, another swoop down. A buying pump, another swoop down. So recognize what's not in your favor and stay away from the second add. You don't need to add to the trade. Take the loss on the first trade. That's fine. I think starting this trade here is okay. But after that rejection, you want to be done with the trade. You don't want to add to that trade. Ideally, this trade should have been here or even here, and then recognizing that it's not working for you, and then you stay away from the trade completely. But because you did not have the trade here or here, you started the trade here, and then I'm talking about me when I say you started the trade here instead of here or here, and then now you're trying to make something out of nothing. You're not recognizing what's against you. You're only trying to see what's for you, which is the higher lows and the higher lows, but you're not recognizing the lower highs and the lower highs also, and each swoop coming behind it. Couple top opportunities, the OKLO all-time high break. I talked about this just a second ago. Then couple other trades over here. Actually, let me quickly bring in this screen for you guys. So these are the amount of charts that I actually written up, or stocks that I wrote up all of last week. Monday, Tuesday, Wednesday, Friday, Thursday, obviously being the Jimmy Carter morning day. And these are what I think are some of the best top opportunities from those days. I'm not going to go more in depth about these top opportunities. If you are interested about that, obviously you can go to my charts catalog link in Notion. All of those links are down below in the description, so check out my charts catalog link in Notion. It will have all of these links and more. All of these links and more. Basically, you will have access to all of my write-ups that I write up every single day for free. All you have to do is go down to the description below. So go check out my top write-ups and other write-ups if you're interested in. But that, ladies and gentlemen, is my weekly write-up. Hopefully, you learned a thing or two. Maybe it's a good sounding board for you to kind of hear my thoughts as to how I could improve. A lot of traders kind of struggle with the same thing, right? FOMO, emotion, sizing, risk management. All people kind of struggle with the same basket. So if you're able to maybe gain a couple things to help yourself on your journey, then maybe hit that like, hit that subscribe, and also do go check out the sponsor of this video. I almost call it a stream because I'm such a live streamer. Go check out the sponsor of this video down below in the description, Flash Research. Thank you, Flash Research, for sponsoring this video. Now let's get over to the second part of this video, which is what I usually do on the Sunday live streams. That will be looking at the earnings board, the economic calendar, and some of the stocks that I might be interested in to trade tomorrow. So let's head over back to the full screen and take a look at Earnings Whispers. Shout out to Earnings Whispers. No affiliation with Earnings Whispers at all, but I do like looking at their calendar. Nice and quick little calendar to take a look at for their earnings board. These are the names that are actually verified that they are going to be announcing. I think some of the other names are rumored, so they did not add the rumored names up here, but these are the verified names that will for sure be reporting. The big names obviously being, I would say, APLD, Applied Blockchain, with Bitcoin moving around back and forth around 100K. APLD potentially something to keep an eye on. Something that stands out is actually the banking sector. Usually banking sectors report on Friday, but I guess because we had a weird start to the year because of multiple holidays, and we have another holiday coming up on January 20th, Martin Luther King, which is also inauguration day. So the earnings calendar kind of got weirded out a little bit. Anyways, we got banking stocks reporting on Wednesday pre-market, such as JP Morgan, Citibank, BlackRock, Wells Fargo, Goldman Sachs. A couple other bank stocks reporting Thursday pre-market. You got Morgan Stanley, US Bancorp, PNC, MNT, Bank of America, United Health Group, also UNH. If you recently were watching the UNH stock, they got absolutely slammed to the downside. If you are not watching the stock market, then you probably don't know about it, but you do know as to what happened recently in the news with UNH. So this earnings report might be very pivotal. It could help the stock go back up to the north side, or maybe it will go back down. We don't know yet. We'll just have to wait and see. TSM, that is a semiconductor stock. So semiconductors obviously on watch. CSM recently broke out to all-time highs and then moved right back to the south side. So always on watch to see how they report the earnings report, how they reacted to the earnings report. Schlumberger, SLB, hopefully I'm saying that right, SLB, State Street, and a bunch of other companies over here reporting pre-market. And Friday is only pre-market reports coming in on Friday from not big companies. I guess you could say SLB is a pretty big company for earnings and so on. But yeah, that's basically the earnings board for us to keep an eye on. I'm going to quickly alt tab over to the econ calendar, economic calendar. Looks like Monday we only have 2-star events, not much that could move the market around. But as the week progresses, we have more and more events that could move the market. The economic calendar gets a little bit busier. For example, Tuesday 8:30 a.m. you got the PPI numbers. Then Wednesday 8:30 a.m. you got the CPI numbers, and then Thursday 8:30 a.m. you got the export, import, and the jobless numbers coming out. This is the current week up ahead. Yeah, this is the current week up ahead. So CPI, PPI, export, import, initial jobless claims, and then some other numbers over here, such as building permits, housing starts on Friday. So Tuesday, Wednesday, Thursday, right in the middle of the week, expected some volatility on the market, which already is not really looking too good. I mean, I think this is the current futures, and the futures are already opening to the downside a little bit. This might not be actual futures right now, but you can see the Dow Jones is actually actually down 2%, I think. The S&P 500 is down 9.19%. I don't see if US 100 is here, but that should be Nasdaq. So the Dow and the SPY are both red at the moment in the I guess you could say pre-market, because the market just opened, but the futures market don't really have pre-market and so on. It's just the overnight sessions, right? The overnight sessions. Anyways, pretty busy for the middle of the week. Be sure to know what time these events come out, because the market could move at those time periods. You want to be careful and not get caught off-sided during those time periods. Ooh, little sneak peek of the thumbnail, but obviously you would have already seen the thumbnail if you're clicking on this video, which I hope is being recorded. If all of this is not being recorded and I just spent another I don't know, an hour, 30 minutes just talking about random stuff to the thin air the second time, because the first time my power cut out and my whole video got deleted. So this would be the second time of me doing everything. All right. Watch list. So let's go to the watch list. My quick overview of the market. So the market looks fairly weak, right? You can look how the S&P 500 and the QQQ. What we got on screen right now is the QQQ. Right now, moving over to the S&P 500 over here. Pretty similar patterns. You get the higher lows and lower lows coming in. Higher lows and lower lows, taking out previous support bottoms and getting ready to potentially move a little bit lower. So I have a zone over here on the QQQ. I'm taking a look at somewhere between 504 to 508.50. So depending on how the market reacts to this 504 bottom, I'm basically playing under over. Either you play above 504, I'm looking long. If you're playing below 504, I'm looking short. Same idea for the S&P 500. I'm playing under over 578.50. You can see which was the most recent low that we put in. The 200-day moving average is at 553. And overall, the market looks somewhat weak. The market looks like it could have topped out for a little bit right before inauguration, and then the inauguration pump can come in and potentially take the market back higher. Who knows? I'm not predicting anything. I'm just expecting what history has previously proven to show. So if that's the case, I'm looking forward to the market being bottomed out and then kind of creating a base, either PPI and CPI and import-export jobless claim numbers, move the market either to the downside or to the high side, and then inauguration comes in and then moves the market all over again. So right now, a little bit of a support zone that I have marked out on both the S&P 500 and on the QQQ. Obviously, the overnight market sessions, potential news articles coming out in the market, and all other fun stuff will make or break my plan that I already have at the moment that I'm creating. So let's see how pre-market sets up. IWM, fairly weak, a little bit weaker than QQQ and the S&P 500. I'd say mainly because a lot of the quantum names, small cap names rallied really hard, and then a lot of them have been now pulling back, right? As the quantum bubble blew up, as the quantum bubble got popped, some of the other stocks have taken a beating too. Drone stocks, AI stocks have been taking a beating, and because of that, IWM pulling back quite a bit. You can call this somewhat of a bear flag on the daily chart, and we're breaking the bear flag to the downside, but right below the bear flag, you have the 200-day moving average. So you don't ideally want to be pressing short into the 200-day moving average. If the weakness is clearly below 215, then the answer is go short any which way. But if we're not being weak below 215, you want to be careful going short into 215. You can be short 220, you can be short 225, but you don't want to be short 215, 216, 217, because your EV going into the 200-day moving average, pressing short into the 200, 250-day moving average is not smart. Ideally not smart. So IWM looking fairly weak, but you want to be careful. If the QQQ and the S&P 500 are both really weak tomorrow, potentially IWM can catch some traction to the downside and bleed along with it. That's my overall market thesis. this, let's head over to a couple stocks that might be of interest. For example, Walgreens. Walgreens reported earnings. Now, they didn't really report an amazing earnings report. Well, I guess a little bit of a pretty good earnings report, I guess. A 34% beat on EPS. But it wasn't like a, you know, knock out of the ballpark earnings report if you ask me. But however, the stock was beat up quite a bit. Very, very, very beat up on the monthly chart here as you're looking, and struggling going into $11, with the earnings report popping up into the most recent gap up high of around $12. $12 also happens to be the 200-day moving average. So if the stock can give us a day of consolidation tomorrow and then break out the next day, or give us dip buys into support zones such as 1130, or potentially set up for a bull flag breakout of $12 into pre-market into the open. So I have a couple scenarios played out that I'm looking out for into this $12 area. A failed breakout of 12 for a short, getting above 12 and staying above 12 on pullbacks looking long, pulling back into 1130 and holding above 1130 looking long. So mostly looking long on this name because of how big and how deep beat down it is. WBA also, I haven't checked out what the was this. No, this is not. This is the page I want to go to. What is their PE? WBA's PE non-existent, forward PE of 8. So all things considered, fairly cheap company. They haven't been making money recently. They've been struggling, but forward PE of 8. If we start getting above 12, I think things can get a little interesting. Staying in the earnings basket, DAL, Delta Airlines, got above the all-time high. Really good earnings report if you ask me. Got above the all-time high on the earnings day itself, but did not manage to stay above the all-time high. The new all-time high now is at $69. So if the stock can stay above $67.50, I think you got to trade up to 69. But if the stock is not showing you buying above 67.50, you can forget the move to 69. You don't have to be short, but you should not long it. Kind of the idea where you don't have to go home, but you can't be here. Same idea. You don't have to trade the stock, but you don't have to go short, but you don't long it, period. You don't go long if the stock is below 67.50, but you don't have to go short. One level that I will kind of give a pass on this stock to look long will be somewhere into the 65 area. If 65 holds, I might be a little interested. That's kind of where Friday's low is. Friday's low is actually 64.50, so 65 to 64.50. I'll give it a pass, a slide, if it wants to go there and show me buying above it, but I need a buying on like a 5-minute, 30-minute basis. I need to see multiple 5-minute candles showing me support above 64.50, above 65 for me to think for a long into 67.50, because that's the best you can potentially get out of it. So keeping an eye on Delta Airlines. Another stock which didn't really report earnings, but in the same basket of name, which is airlines, UAL popped up into all-time high and actually stayed above all-time high, whereas Delta Airlines that reported earnings did not stay above its all-time high. So a little bit of a question mark over here, watching to see if the stock will get back below 105 for a short opportunity as a sympathy trade, as long as Delta Airlines is weak. If Delta Airlines is strong, there is a chance that United Airlines stays above 105 and doesn't really flush down. So you might want to be careful pushing the short on this name just because of Delta Airlines giving it sympathy and so on. If Delta Airlines strong, there's a chance that United Airlines does not get back below 105, so don't force that short. But if Delta is weak, UAL below 105 is interesting. CEG, Constellation Energy Corporation, this is not really wait, why am I CEG? I want to go to STZ. STZ, Constellation Brands. So this is the alcohol company, Constellation Brands. I'm not sure if they do cigarettes also, but mostly alcohol brands and so on, taking a big beating to the downside on their earnings report, flushing below 200. So waiting to see how the stock reacts on a pop, looking for day 2 plays, looking for the earnings anchored VWAP, looking for the even $200 to see if either of these levels give me some sort of a short opportunity to capitalize on. Going to the other constellation name, but not alcohol, this is energy name, going to the other constellation company. This one is apparently buying out mergers and acquisition of another company, so that usually gives the buyer a down move, and the acquirer goes lower and the acquiree goes higher. But looks like the acquirer usually acquirer over here in this case is gonna go higher, so big bump on the acquirer over here, taken out above its all-time high. Waiting to see if the stock, same idea as STZ, if you can pull in and show me support above 300, I might be interested on a long on CEG. Show me support on a pullback above 300. The lowest number I'll look for a long is 297.50. If that stock is not holding above 297.50, 297, I am not looking long. So CEG, the bottom line 297. The first front line that I want to see defended is 300. As long as 300 holds, I think looking long on CEG is okay. Now the next few basket of stocks is actually the quantum basket of stocks that I'm going to be taking a look at. So that's going to be ARQQ, IonQ, RGTI, QUBT, and so on. All of them basically have the same big picture thesis. That's that the big picture thesis is Jensen Huang said that the companies are 15 years to 30 years out, and then you have Mark Zuckerberg, who actually a few days ago, I think it was Friday, Mark Zuckerberg on the Joe Rogan podcast in the middle of the day during market hours said, quantum stocks, he doesn't know too much about quantum, but quantum company as a product is actually probably a decade out. So that's possibly going to now be another big CEO in the tech world who is going to cause quantum bubble to pop even more. So there's a lot more room to the downside on these names. QMCO, for example, the stock was at $90 recently. It's got room all the way back to 14. It's got room all the way back to $1, if you ask me, right? So a lot of these stocks have a lot of room to the downside. LAES, ARQQ, IonQQ, IONQ, RGTI, QUBT, QBTS. So make a basket of names, watch for them. Obviously don't short the one that's relatively strong, and I would say that's probably IonQ. If IonQ is strong above 28, you don't want to be short. If the whole basket of names are relatively strong, then maybe you want to be looking for the ones that are actually bouncing fairly well, such as LAES or IonQ, for example. And if you are only interested in the short side, then look for the stocks that have already gone beat down quite a bit and wait for them to pop and then get short on them. For example, QBTS is well under the start of this whole ignition move, so they're under that move and they're holding below that move. So if any pops into 7, continue to show weakness on QBTS, but other quantum names keep going higher, then that's where you want to be short. This is where you want to be short, especially when all quantum names start to roll back after they hit their high a day. If they all hit their high a day and start rolling back while QBTS is still struggling around $7, you want to be ready to pull that trigger. So make a basket of stocks, make a plan for all of these. I have basically planned out for all of these trades what I want to do. For example, ARQQ might have a 3-bar play on the daily chart below 2150. I'm interested on that. IonQ, you're playing under over 28, and then right below 28 you got that $26 low. RGTI could have a capitulation long. This is a pretty big drop to the downside, a 50% drop from its highs, and it could easily open straight into $5, $6, and give you a capitulation long instead, right? It's a little overextended to the downside, so watch for capitulation longs. So ideas across the board, spread them out. Look at the chart patterns and then see what trade applies to that chart pattern. For example, you wouldn't be potentially looking for a capitulation long on on I think it's QUBT. Maybe you could look for a capitulation long on QUBT, but the idea is, it's a much cleaner breakdown short, especially if it breaks down below, what is that low, 850. If you get a consolidation into 850, an opening range breakdown into 850, and you're able to go short 850, imagine how good of a move that could be, all the way down to $4, or even this consolidation low of $6. So getting short 850, risking maybe 20-30 cents on that trade, and you end up getting $2 per share on that trade. Come on now. So watching for chart patterns playing out, and all of them don't really have the same pattern. So make sure you're studying these charts. Next sector on watch, MVST. This is the battery sector. So as some of the small caps start moving back down, and IWM obviously going into its 200-day moving average, you might want to be careful taking breakouts, especially also when the QQQ and the S&P 500 are looking weak. You might want to be careful taking breakouts. But that being said, MVST stands out really quickly as we're looking at it. The previous high right there into $3. If the stock can start getting above 287, $3, and show you buying above $3, I think that will be interesting. You might not want to take the breakout, but you might want to set an alert in this area. That way, if the stock actually breaks out, pulls back, and shows you buying above 287, above $3, that might be a good spot to get long into. Or if you want to be interested to take the breakout, but make sure you're not giving it too much risk, because you want to be jumping in and jumping out for the breakout, especially if right now the breakouts are not really working too well. So you don't want to be smashing the breakouts. Previously, when the market was going above all-time high and going every single day, a new all-time high was created, yeah, take the breakouts then. Who cares? You're just getting monster moves. Next sector, robotic sector. This one looks like almost like a cup and handle on the daily chart. We're just waiting for the handle to form, I guess. So a nice U shape, a cup and handle, getting ready to form. You can call this a mini cup and handle, right? A mini cup. You got a handle and then a blast off, another cup, another handle, and a blast off. And now you're getting a bigger cup and a potential handle to be formed, and another blast off. But so watching how AI names robotic names SERV, ARBE, another one giving you a good bounce off the bottoms, right? They're the IWM sector, the overall market being weak, quantum bubble being popped, but robotic sectors, some of them showing some relative strength, some of them moving lower, but still showing you strength above their previous zones. So look for, obviously create a basket, be ready for them. The three names that I'm interested the most in is ARBE, GFAI, and SERV. Almost done over here. Last few names, not really, but still quite a bit of names over here, but quickly going to run through them. It's going to be the crypto basket, MSTR. Obviously, you're tracking to see how Bitcoin is trading. Watch to see if BTC gets back above 95 to 100K, which it is right now, is back above 95K. Coinbase has somewhat of a breakdown bottom. If we do get below 246, I think Coinbase could go into the 200-day moving average, but you want to be careful pressing short into 225. 224 is okay, but 225 breakdown, you don't really want to press that short. You want to be careful. Square. You could say it's in the crypto basket of names, right? The name is block for blockchain, so Square blockchain. They're changing their name to XYZ. That caused the stock to sell off a little bit, going into previous support. So basically under over $82. 81.80, $82 under over. If you see some weakness below 81.80 or even $80, simple flat $80, I think you got a nice $5 room into the 200-day moving average over here on SQ. But with you would potentially want Bitcoin to be also weak, not just the market. You would want to see Bitcoin being weak also. I think that could really pour some fuel to the fire over here on SQ to the downside. Nvidia. I think Nvidia is a clear 133 to 140 for me. So 134. So either the stock stays above 134 and goes back into 140, or it gets below 134, and then that opens up a little bit of a floodgate to the downside on Nvidia into 128 to 126, which was last month's low. And it could potentially even go even deeper into the 200-day moving average over a swing term scale if the market looks weak. At the moment, semiconductors look fairly weak. You got a double top reject on the Nvidia over here. You also got a double top reject. Well, not a double top reject. The failed all-time high break on TSM, who are reporting very soon. Micron got slammed back down a little bit. And then AMD at a new 52-week high. Intel all the way back into 1850. So lots of weakness across the semiconductor basket. AMD, for example, under 114, sorry, under 117, 118, which is a new 52-week low now. So AMD struggling, semiconductor struggling. If that's the case, Nvidia below 134 should be a trade opportunity to keep an eye out for. Palantir, the AI names. So coming back to the AI names, wait, was I not already? Oh, that was robotics. Okay, gotcha. Coming back into going to the AI names, not coming back into the AI names. I would say Palantir is a little, too far to the downside, too quick. Not sure if you want to be extremely short to the downside on Palantir at the moment. Maybe on pops, I would much rather like a pop to get short into on Palantir. But Palantir idea is it's still too expensive of a stock. The PE is $340. Why did I say $3? The PE is 340. So waiting for Palantir to give me a pop to get short into. Obviously, way too overpriced, way too expensive. The price is too damn high, and the shareholders are obviously trying to manipulate the company over here. They said it themselves. They're trying to manipulate it so they can burn the short sellers. So let's see if they succeed or if the short sellers succeed going forward. I think right now the psychological level is $70. Just the psychological level. If Palantir can get above 70, no shorts. If Palantir stays below 70, on pops into 70, I think looking short is still fine. That means be short closer to 70, not at 65, right? So not at 65, be short closer to 70. SOUN, also a pretty big move to the downside. It is currently 25%, 20% away from the 5-day moving average, going into the support pocket. If the stock doesn't get below $13, under $12.80, $12.70 to $13, I don't think you want to be shorting it. The only way I'm shorting the stock is if it can show me weakness below 13. So what I'm saying is, ideally, I'm looking long on SoundHound. This is just a name that got beat up because of the quantum bubble popping. They are an AI name. They are a name that recently had partnerships with Nvidia and a bunch of other companies. If you actually go to their website, you can find out more about their awesome product. Not that I use it or anything, but SoundHound, right? It could be used in a bunch of applications in the future. We're just not there yet. We're just not in that future yet. So waiting to see if the stock can rebound and have some relief rally like the robotics have been holding off at the moment, as AI potentially has the money inflowing again. You had some money pouring out of AI and going into quantum, going into robotics, but now the quantum money is being pulled out again, and then potentially going back into AI, going into robotics, going into drone, and all other fun stuff. So watching SoundHound AI for a potential move for the upside, but more downside moves. Obviously excited for that one if that ends up being the case, because I love shorting stocks. Now the last 4 or 5 stocks over here, that's it. Last 4 or 5 stocks. I have no clue what the stocks do or why they moved around, but they have good patterns. So I saw these on Trade Ideas, also one of my sponsors. Check out their links below in the description. I created a scanner for stocks that are up the most on the monthly basis, and BDMD was one of them. And if you look at the chart, I mean, that looks like a chart that's getting ready for a breakout, would you not say? So let's look out to see how the stock reacts reacts on a move above 935. BDMD on watch. Fubo partnership with Disney. You could look for what is the mean reversion short, right? It's really extended. The stock was $1 just on Friday, January 3rd, 2025, and now it's at 650 on Friday, January 10th, 2025. So that's a little crazy if you ask me. How much is that? That's 350% growth in 4 or 5 days. So insane move overall on Fubo. So ideally looking for mean reversion might not be the wrong idea, but if you look at how the company's fundamentals are changing, that might be the reason why it's a wrong idea, right? So the fundamentals are changing, the big picture concept, the big picture idea on Fubo is changing, and if you look at it on the daily chart right now at 4.95 at $5 is where the moves anchored VWAP is. The news anchored VWAP is at $5. So as long as the stock stays above 5, I think looking long is still a play to be kept on watch, and then a move into 6 or higher as now the partnership starts to potentially make Fubo somewhat of a more legitimate company. I'm saying somewhat because Fubo sucks at the moment. Their platform is absolute dog shit. Their reviews are horrible. Everyone who I know who has used Fubo hates Fubo. So I'm looking forward to see if this partnership with Disney changes some things for them. FTAI. Another name, no clue what they do. FTAI Aviation, looks like they actually had a mixed earnings report, but some news catalyst coupled with a bunch of other upgrades from other companies has taken the stock from a breakout into all-time high to a failed all-time high breakout. So watching to see if the stock can continue its rally, or maybe it gives us a mean reversion. Ideally 177 to 180. If 180 does not hold on the bid, a pop into 180 and look short, I think that's something to keep an eye off. But if the stock is able to get above 180, there could be a long over there. Low volume stock, expensive name also, not really like expensive, but I'm saying in terms of notional value, with how much volume it's trading and the price of the stock, the spread could be ugly. So you want to be careful. This could be something on a slower side of a trade, not a trade that you want to be right off the open, potentially on the slower side of the trading basket. W Key. I like this name so much because being a video gamer, especially FPS, which is first person shooter gamer, I W Key a lot. So if you are a W Keyer, you would like this name also. Anyways, W Key, another small cap name, holding pretty well and looking like getting ready for a breakout. So watching for how the dips react and watching to see how the pops also react on W Key. Last but not least, PCB, Supercom, if I remember correctly, an Israeli company. I can't remember if it was or not. I think it's an Israeli company. Maybe not. Where you guys are located? I was right. Israeli company. Recently good catalyst, good news, taking it to the 1080 area, rejecting off the 1080 quite drastically, but then bouncing right back up, holding the 9 EMA on the daily chart. So basically holding the 9-day moving average and getting ready for a potential breakout. So if this stock gets ready to get higher than 1080, let's just say 11, round it up to 11. If SPCB goes back above 11 and shows you strength above 11, keep an eye out for the long on that one. That is basically the watch list for the coming week up ahead, or the tomorrow / the week ahead, and we'll be very interested to see what opportunities, what new names, what new opportunities. Obviously you'll have your small cap gappers that you can short, and small gap crappers I should say, that you can short, and all their fun setups and all news catalysts and all their fun setups that will be available for the people with the right tools and so on. So if you are interested in the right tools for the job, all the links are down below in the description. Check out the link in the description below. Benzinga, trade ideas, flash research, and also I put in a new link over there, which is my Notion link. If you are interested to leech if you want all of my data for free that I've been working so hard to create, feel free to go check out the link below in the description. I will see you guys obviously Monday to Thursday 8 p.m. for the YouTube live streams, and then Sunday for these videos. That's 8 p.m. Eastern Standard Time. Thank you for watching this video. I'm out. Peace.